Hello, how are you, my friends? Today I am going to discuss the accounting principles. So, what is accounting principles? Actually, principles of accounting are the general law or rule adopted or proposed as a guide to action, a settled ground or basis of conduct or practice. So the main features of accounting principles are: it is completely man-made. Of course, it is very flexible in nature. Relevant. Accounting principles are very relevant if they result in information that is very useful to the users of accounting information. Feasible. Accounting principles are feasible if they can be applied without undue complexity and cost. They are actually objective. If they are not influenced by the personal bias of the person preparing the accounting information. So, accounting principles or concepts are the assumptions, or we can say these are the propositions based on which financial transactions are recorded and prepared. In other words, we can say that there are principles or rules of accounting. These principles or rules are followed so that financial statements are better understood and in a uniform manner by the user. So accounting principles or concepts are 15 types. Number 1, most important, going concern concept. According to this concept, it is taken that business will continue for a foreseeable future and there is no intention to close down the business or scale down its operation significantly. So it is a continuous process. We can say that business will continue for an indefinite period and there is no intention to close the business or reduce its size significantly. Next concept, accounting entity concept. Accounting entity concept is very useful, is very important. When business is treated as separate entity distinct from its owner, business has got its own identity. The third one, money measurement concept. In case of money measurement concept, transaction and events that can be measured and expressed in terms of money are recorded in the books of account. In other words, money is the common denominator in recording and reporting the transactions. Consider that an enterprise has rupees 10,000 cash, 6 tons of raw material, 6 trucks and 10,000 square yards of land. These assets cannot be added and shown in the financial statements unless their monetary value is known. So this concept makes accounting information more meaningful and significant and useful for analysis of financial statement. Next, accounting period or periodicity concept. According to accounting period or periodicity concept, life of an enterprise is divided into smaller periods. it is rather broken into smaller periods so that its performance is measured at regular intervals. The accounts of an enterprise are maintained following the going concern concept. So, meaning that the enterprise shall continue its activities in the foreseeable future. So, in view of the above, we can say that the life of the enterprise is broken into smaller periods, usually 1 year, which is termed as accounting period. Next is the complete or full disclosure concept. In that case, the concept of complete disclosure are also known as full disclosure. There should be complete and understandable reporting on the financial statement of all significant informations relating to the economic affair of the entity. So while preparing the financial statements, it should be ensured that significant facts or informations are not to be omitted. It would increase the relevance and reliability of the financial statements. Next, revenue recognition or realization concept. It is a very important concept and it plays a vital role in accountancy. Revenue recognition. According to this concept, revenue is considered to have been realized when a transaction has been entered into and the obligation to receive the amount has been established. Revenue recognized at the point of rendering services, but there are certain exceptions to this rule. First, in case of long-term contracts, revenue is recognized before completion of the contract. Secondly, when the cash basis of accounting is followed, that means we are considering only the cash part. In that case, revenue is recognized when payment is received in cash. And third, in case of sale of goods under hire purchase system or installment systems, revenue is recognized in proportion to the amount becoming due. And last but not the least, in case of gold mining, revenue is recognized at the point of production itself. Next concept, variable, objective or evidence concept. Objectivity means reliability, trustworthiness and verifiability, which means that there is some evidence in ascertaining the correctness of the information reported. Next, matching concept or matching principle. This is also an important for practical problems. According to the matching concept, revenue and cost, I repeat, revenue and related costs should be recognized in the same accounting period, since the accounts are usually prepared on accrual basis. What is accrual basis? Where we consider cash and as well as credit transactions. So the expenses incurred in an accounting period are matched with the revenues recognized in that period. This is the concept of matching principle. Next, historical cost concept. The transactions are recorded in the books of account at their cost to the business. For example, an asset is recorded in the books of account at the price paid to acquire it, and the cost is the basis for all subsequent accounting of the asset. So asset is recorded at the cost at the time of its purchase, but is systematically reduced in value by charging depreciation. That means the value of assets, once you have purchased, it reduces every year eventually with the passage of time. But for accounting purposes, it continues to be shown in the books of account at its book value, purchase. For instance, suppose you have purchased an asset for rupees 5 lakhs, and if at the time of preparing the accounts, even if its market value is say rupees 4 lakhs, that means it goes down to rupees 4 lakhs, or else it may be increased to rupees 7 lakhs, as the case may be. Yet the asset shall be recorded at its purchase price, that is 5 lakhs. So you should have to record your asset as per historical concept in their original price. Next, accrual concept. According to accrual concept, a transaction is recorded at the time when it takes place and not when the settlement takes place. Just remember, not when the settlement takes place. The concept is important because it recognizes assets, liabilities, revenues, and expenses as and when transactions relating to them are entered into. Under this concept, along with the revenue recognition concept, revenue is recognized as earned when the goods or services are sold to a customer, who in turn has taken the obligation to pay for them. Similarly, expenses is regarded as incurred when the goods or services are purchased and an obligation to pay for them has been assumed. So, this concept recognizes revenue and expenses as they are earned or incurred respectively, ignoring the date of receipt or payment. Next concept, dual aspect concept. Dual aspect concept. According to the dual aspect concept, every transaction has two aspects, a debit and a credit of equal amount. In other words, every transaction has a twofold effect. Simply stated, for every debit, there is a credit of equal amount and vice versa. For example, X starts a business with a capital of rupees 1 lakh. There are two aspects of this transaction. On one hand, the business has an asset of rupees 1 lakh, that is cash, while on the other hand, the business has a liability towards the proprietor of rupees 1 lakh, which is taken as the proprietor's capital. So the expression is capital is equal to cash. So that means every debit has an equal credit. This is the concept of dual aspect. Materiality concept. The materiality concept refers to the relative importance of an item or an event. An amount may be considered material in the accounts if its inclusion in or omission from the income statement. Income statement means we will have to prepare some profit and loss account, statement of profit and loss account in case of companies. So it would affect or influence the decision of the user. So materiality concept is very important. It cannot be overemphasized. Next, 13. Consistency concept. In case of consistency concept, accounting practices once selected and adopted should be applied consistently year after year. The concept helps in better understanding of accounting information and makes it comparable with that of previous years. Consistency, what it will do? Consistency eliminates personal bias and is particularly important when alternative accounting practices are equally acceptable. For example, two methods of charging depreciation. There are two methods of charging depreciation. One is, say, written down value method, another one is straight line method. All are equally acceptable, but the method once chosen and applied should be applied consistently year after year. So this is the concept of consistency. Conservatism and prudence concept. This is number 14. Conservatism concept is many a time described using the phrase, do not anticipate a profit, but consider for all possible losses. In other words, prospective losses are accounted while prospective incomes are not accounted. The application of this concept ensures that the financial statements do not paint a better picture than what actually is. So this is a very important concept in accountancy. And the last but not the least, timeliness. What is timeliness? Timeliness means that the financial statement or information should be provided to users within a reasonable time. The information not provided on time loses its importance and relevance. For example, if financial statements for the year ended 31st March 2020 are furnished in January 2021, they do not remain useful because considerable time has elapsed and corrective action may not be possible in proper time. So these are the facts of timeliness. So the entire things, whatever we have discussed, are very important for any student in order to know the accounting principle or concepts. So hope you like the chapter, the topic. So if you like, then please like, share and subscribe, and don't forget to press the bell icon. So that's all for the day. Thank you.